Everybody, how's it going? We've got on the live stream. We're live here on August 14th, 2025. Ed, Don, Rob, David, Will, Scott, Donald, Craig, Frank, Mark, Ellen, Carlene, Mary, Terry, Dan, Diane, Cliff. Good morning, everybody. Francois, Catherine, Ted, Be Like Water, Jason, Arturo, Jan, Pat, Cohen? Morning. New name. Good to see you. Good to have you. Gabe, good to have you. Rob, Gary, Mark, Sledge, Captain Sledge, good to see you. Going going somewhere else, huh? You done in New Orleans? Heading on out. Wrongimer. Good to see everybody. PPI out. The market kind of dropping a little bit. I don't know. Anybody dig into the PPI at all? It's kind of a maybe a surprise. I don't know. Let's talk about it slightly. Let's talk about it slightly. Let's talk about it for a minute, shall we? And maybe it's a market. I mean, maybe we're market masochists, right? I mean, Thursday, August 14th, and you're wondering why your portfolio might be opening lower this morning after that nice plump day yesterday. At least it was plump day for me. I mean, let me tell you about this producer price index. Now, for those of you who skipped the economics class, hang on to your gym bag. The PPI is basically what businesses pay for their stuff before they mark it up and sell it to you. Producer price index. All right, it's producers, they produce goods, they sell it to you, and it's what they pay. So it's kind of like the wholesale price tag on America's economic shopping cart. And today, that shopping cart just got more expensive. The Bureau of Labor Statistics is who puts this out, and that's a real government agency, not just some words thrown together. They released July's PPI numbers this morning, which is Producer Price Index. And the smart money, maybe the economists, the guys with the fancy degrees, definitely fancy coffee machines from what I've seen in the rebuild, they all predicted a nice gentle 0.2% increase. And you know, the kind of numbers that, you know, let us all keep pretending that this soft landing of mythical legend is still going. You know, the place where inflation just magically disappears without anybody getting hurt at all. But here's where our story takes a maybe delicious turn. The actual number, 0.9% today. That's not a rounding error. That's a 4.5 times bigger increase than the expected prediction from all the smart economic predictors, people that do this for a living. I mean, that's like expecting a light drizzle and getting drowned out. Poor people of Chattanooga yesterday, or Tuesday. And golly, did y'all see that flooding in Chattanooga? 7 inches in a matter of hours. Craziness. Now, as I'm recording this, it's been about 20 minutes. Well, as I wrote this, it was 20 minutes. Now it's been like 40 minutes since these numbers came out. The stock market kind of down and looking like we might have a meltdown. Futures are red. Treasury yields are kind of sparky a little bit. Somewhere in a corner office, the Fed officials probably stress eating a donut while Googling how to explain inflation and how we're going to do rate cuts or not rate cuts. But there's more. The annual PPI number came in at 3.3%. That's higher than the increase we saw in CPI earlier this week. I don't think the Fed can cut rates. Remember the target, 2%, right? This is what they've been chasing, like a dog chasing its own tail for the last 5 years. Now, here's where the story gets really interesting, though. See, this isn't just random bad luck and a cosmic joke. No, this is the consequences. Remember all those tariffs we've been slapping on everything? Well, guess what? Tariffs actually do cause inflation. David A., this is what you were asking, right? I know, shocking revelation. Trade services margins have jumped 2% in July, and that's businesses saying, hey, the government just made our inputs, imports are inputs, to our business more expensive. So guess what? They're going to pass that cost along to you, the dear consumer. And it's a game of economic hot potato, except this potato's on fire and everybody's wearing oven mittens made of tissue paper. Uh-oh. So here's my favorite part of this whole circus. The markets have been pricing in a virtual certainty, 100% certainty, that the Fed is going to cut interest rates next month in September. They are so confident that they might as well have already priced it all in, right? Powell was going to ride a white horse, slash the rates, and everybody was going to be happily ever after. Prices go up forever, right? Well, that party just got canceled faster than a beach party vacation during a tsunami warning. And speaking of fairy tales, let's talk about the elephant in the room, or should I say the data reliability crisis that's been going on, the BLS, the same people that brought us today's fun surprise numbers. Well, they've been dealing with budget cuts and layoffs and new heads of whatever. They've had to eliminate 350 categories from their data collection. That's like trying to bake a cake, but only measuring half of the ingredients and guessing on the rest of it. Meanwhile, the political circus just continues. Trump fired the previous BLS commissioner and nominated a guy who's been openly critical of the Bureau's methods. So now we have the delightful situation where people collecting the data under attack by the people who appointed them. And it's like hiring a weatherman and then complaining when he tells you it's going to rain. Now, for savvy investors out there, I know you are. You're here. You're watching me. You come and subscribe and hang out with me every day. So what's this mean for your money? How do we make money today? First off, that September rate cut, probably not going to be a sure thing. All right. Maybe even a rate raise. Powell hinted at that during the last FOMC meeting, and that's one reason why we kind of sold off a little bit. The Fed's caught between a rock and a hard place, DGS2 not budging, and we might see more inflation as these tariffs actually get baked into the cake. So be careful, all right? That's permacautious. That's what I keep saying. It's like being asked to choose between stepping on a Lego barefooted or listening to elevator music for the rest of eternity. Although, I don't know about y'all. I guess I'm getting old because the elevator music starts sounding like stuff I listened to when I was in high school and stuff, college. So this PPI number is what we're call a leading indicator. It's like the canary in the coal mine, except the canary started coughing and the wholesale price increase. They're going to work your way into your final bill, whether that's grocery store bills or cars or parts or houses or whatever. And it's probably going to get worse. So here's the quick and dirty breakdown. Growth stocks, these companies are supposed to grow into their valuation sometime in the next century. Those are the ones that might get hit hardest, fastest. Higher inflation means higher discount rates. Higher discount rates mean future profits worth less today. Basic math, even if Wall Street likes to pretend it's rocket science. All right. On the flip side, if you own energy stocks, commodities, anything that benefits from inflation, you might be smiling right now. That's usually where money flows. Real estate could go either way. We have this commercial real estate crisis problem brewing in the background. I'm seeing a lot of construction projects, especially the smaller construction projects, kind of go on hold a little bit. It's like being offered free lunch that costs $20. So here's the real kicker. This is where the story gets totally absurd. For months, we've been hearing about this amazing soft landing. Inflation's supposed to be under control. Reality just has other plans, right? See, when you implement policies that directly increase cost, hello, tariffs, then act like you're totally surprised when costs actually have to increase. That's not economics. That's kind of comedy. It's like putting sugar in your coffee and wondering why it tastes sweet. And then the best part, in a few weeks, when the next consumer price index comes out, we might see a similar increase. Although it usually takes about 6 weeks to trickle down. So it may be 2 CPIs before we actually see those prices hit in the market. Ooh, not good. So wholesale prices are increasing. That's one of the warning signs I talked about. The talking heads on financial TV are probably going to debate this in the transitory purgatory. We'll see. I don't think we're seeing rate cuts anytime soon. So there you have it. That's PPI in all its glory. The soft landing. Well, We might hit some turbulence on the way down. Might lose a wing. Anyway, remember, in the world of investing, the only certainty is uncertainty. The only surprise is when there's no surprise. Today, definitely not one of those days. We got a little pullback in the market so far. Let's be careful out there. Keep watching. Let's talk about how we make money today. Let's look at the lists, see what we got cooking. Before we get too far into it, though, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. And if you desire personal financial advice, hire and consult a financial advisor, which is not me. So don't buy stocks, options, bonds, forex, futures, cryptos, treasuries. Don't trade them. You might lose money. That's what that means. If you can't handle that, don't use real money. You can paper trade. And don't buy stuff from gurus. Don't buy stuff from me. All right? Unless you trust me. I mean, that's just, there's a lot of snakes and crooks in this industry, and people are absolutely full of bullshit. Welcome to the show. Especially if you're new here. Give me a shout out in the chat if you're brand new, first show ever. Love to welcome new people. Make sure you're subscribed. Hit the button all the way on the other side if you want to get in the live chat while I'm live. Looking at the futures here. Ooh, taking a step back. Yikes. Whew. All that grinding higher yesterday. Taking a quick step back today. We hit the target, though. Look at that. On the nose. That level, I said, right there. We hit it. Kapow. Kapow, kapow, kapow. That's 6,500 from back here. That pullback we did back here. We hit that upside target. To the tick. Looks like. Now we're pulling back. Imagine that. Imagine that. So I follow a couple of market patterns. If you're brand new here, I follow what I call the market roadmap bounce, this orange line on the charts. I have a video pinned to the channel that gives you the code and everything, and the link's in the description if you want an easy button for it. All time frames, all tickers, they all tend to bounce off of this and find support there or resistance if they break below it and come back up. And it's a repeatable pattern that has 75%, basically 75% likeliness to work out. And we can look at it over and over and over, looking at the bigger twist and turn that the market did right back here. This bigger pullback we got on the back of the FOMC, we just made the extension right to the exact target right there. We triggered off that entry right back here, and we got the target right there. Now what do we expect? A pullback off that level. Now we may retest the breakout, which we've kind of already gone through it a little bit. Could just be retesting that breakout and go on higher. Next higher targets right up here. 65.40 on the futures. Cash index just opened up, down a bit. Looking at that cash index, popping up just a little bit. Did we hit the target? Let's find out. There was downside risk. I thought we might take a bigger correction, but nope, we went on higher. So we've got this high right here. We've got this low right here. And we hit well into the target. So next target's up on the cash index, 64.88. Why do I look at the futures? Because there's no data gaps, right? Cash index stops trading overnight, and then we get gaps. We get gaps everywhere. Futures, they're closed for about an hour. You can see not very many gaps in here at all. So it backfills the price action for me and lets me better predict where we're heading next. Right now, probably going to be a correction. We'll get back into that toward the end of the show. I do have to wrap this up a little early today. I've got another show I have to go be on at 10 o'clock. Opening playbook, I think they call it. So I'll have to cut this one just a tad short today, unfortunately. So let's get ripping through. NASDAQ pulling back as expected. Now, very evidently clear on this is the fact we have a first move down, a retrace, and a second move down, and we're coming into a potential support zone right here. This would be an absolutely beautiful correction proportion right there if we stop right there and turn around. So this is where I'm looking for support. If we start slicing through that, we could be indicating we're going to have continuation lower. So be very keenly aware of that zone right there between 23.7 and 23.8 on the futures. Russell, we went on up. Hit that. Look at that. I said yesterday, I drew that line across there. I was like, we might go retest that. And that's exactly what we did and turned down immediately. So the daily roadmap line is important here. If we break back down below that September hedge I have on might pay out yet. We'll see. Might run out of time. We're getting short on it. Only got about a month left. Speaking of options plays, got a margin call on my futures. This is ridiculous, right? So I sold the 59.60. Maybe like, you sold what? Yeah. So futures have options. I went out to Friday. I sold this 59.60. I got a margin call this morning due today. I'm not sure how that's going to play out. I think it was because of the news. I sold a 59.60 all the way down here. Sold that put right there. It's kind of interesting, right? That's look at it. The odds it's going to be in the money are like less than, it's like odds is going to be full profit. 99 point, I think it's 99.9% at this point that it's going to be full profit. I leave 0.01% chance, 0.1% chance it's going to be in the money. I guess the point goes right here. 0.1% chance. That seems like a pretty solid bet. So why are they giving me a margin call? It's kind of interesting. The market's going to have to drop, golly, look at that, 500 points to put me at risk. And it's going to have to do that by tomorrow. Seems unlikely to me. Seems very unlikely. So picking up pieces here. If you were wanting to grab the same sort of trade, right now you'd probably have to jump up around 6,020, 625 probably to get the same credit I got. I got 0.35 on that. I don't know why they're ramping up the margin on that either. Kind of weird. So generally you can play down here 500 points out of the money at the, zero delta, and it costs you about 2K in margin. Roughly 2.5K in margin. If you're at a broker that does that, right there. So I have 2 contracts going right now, so that's about like 5K in margin right there. To hold those 2 contracts, 500 points out of the money. It's not like I have 100 contracts. I just have 2, so kind of weird. Anyway, and just in case you haven't been keeping up, here's where we're at. All time, 23.8. I started this challenge. This is the 50K challenge. Started this in April. Jump over here, look right here. First trades, April. Had this account open for years. First trade. Refunded the account. This is how we're doing since April. So getting close. We got 2 days before we've been doing this for 4 months. 2 more days. It'll be 4 months. There's our profit this year in 4 months. Not bad. Got some more stuff going to close out. 3-month profit, 20K. And the goal is to generate this 1-month profit to get that number up to a consistent 50K. Repeatable over and over and over, month after month. I can do it. It's going to take me a little while. So that's what we got so far. Maybe like, well, how are we doing? So here's the month right here. 14K, 100% winners. Average gain per trade. Now we do have caught a big one in here. All right. And I'm not going to fluff it up. That one's going to drop off here before long. Roll down in here. This one, 18th of July, booked a nice fat winner on Rocket Lab. So come 4 more days, that one's going to drop off. And then the profit for the month is going to plummet down, be a couple K. So still got work to do to get to that big number, 50K a month reliably. If you want to follow along, this is public. It's on KInfo right here. Every trade, as soon as I close it, gets verified by KInfo and posted on here. It's kinfo.com/Jeffrey or /P/Jeffrey. I can throw that in the chat. There. What other guru do you follow that posts their stuff on KInfo and has 100% win rate the last month right there? Yeah. There's the trades right there. They're open. They're available for public right there. Click the link, go to it. You can get them all for free. Right there you go. Latest trades. You can click on the all trades button and every single trade ever in this account. Right there. There you go. Who else does that? Who else does that? All right, moving on. So playing this, got a margin call. We'll see what happens. See what happens. I mean, there are other people that share. There's not many. There are people that share. They're full trade log like that. But I don't know many of them. I know one guy that convinced me to do it. That's who I follow. When you look at my good friend, Rob Booker, he's the one that encouraged me to do that. Look at his profit. Pachow. He's doing real good work there. So he's the one that got me into doing this guru stuff. Good friend of mine. So he encouraged me to share this on KInfo. Give it away for free, baby. So there we go. How do we make money today, right? How do you make money today? What are we watching today, JT? Let's pop on down the list. Bitcoin. Ouch. Ouch. What the fork? Tried to break out. Almost hit the target. All the way back down. This is the wave 2 I was talking about. We didn't do it over here. I thought we were doing it off of this high. Nope. We're doing it off of this new high. This is the wave 2. I was just talking about it 3 candles too early. So let's see what we got. Probably coming back down. You'd be like, whew, that's a lot of lines, JT. I know. Bear with me a minute. Bear with me a minute. Here's the low. Here's the high. We're almost there. Looking for it to come into the uprights here. We're just touching in. Right there. So we're looking for support. Primary expectation, 116.5. We want to bounce off that. We can go as deep as 114.5. And if we close down here on the day, any day, not necessarily just today, any day, if we get a daily close down here before going higher, probably going lower low. Then that low right back there. To start off the month, just 2 weeks ago. There's the path for Bitcoin. Like this is the zone. We want to hold this line. This is the line in the sand. We get below it, probably coming down here. If we bounce, this is where things get really fun and spicy. If we can bounce on this ideal bounce target, here's the low, here's the high, here's the low, and that sets it up for this target right here, and maybe that extension right there. 129, 132, 137. Now we're starting to get close to that 150 target up there. That may result in a pullback and then the final move. The final countdown. You can think that Bitcoin's going higher forever if you want. Sad reality, it's not. We're going to have crypto winter. Maybe a big crypto winter, maybe a small one. Look at that. Red alert zone. So far, negative reaction off of it. No bueno. No bueno. Not good. Right there. We want to get through that zone if we're going on higher. So keep an eye on this. We could, if we start breaking down below the daily roadmap line, that's a long way back down. Things are not going to be great. I'm not touching Rocket Lab till it gets a bigger pullback. You can play that pony if you want to. I'm not messing with it till it gets another bigger pullback. Rocket NKD. This is Nike. I watched this for global liquidity indications. Coming back to back test. If we get below that, we may be in for a bigger correction in the market. If we can hold above it, we've set up all the things that we needed to do to go higher, but we may need a retrace before we can actually get the momentum going to go higher. So I'm optimistic that we can push higher from here, but we might need a pullback because it's been a few days since we got a big one. Dollar, probably going to continue to grind down. That was a corrective move up. We busted down through. We back tested the 618. A, B, C target puts us here. And the more aggressive downside, maybe get continuation target down here at the downtrend line down here. Somewhere around 95.6. Looking at Mag 7 stuff. Apple, not really being affected today much at all. Amazon, she's popping, baby. If we can break out. We have that gap down over here. Little gap down. We rejected off of it pretty severely. If we can break through it, going on up 257, 271. Google, still got to fill that gap. No, it doesn't seem to be affected too much. All the Mag 7s holding up really well. Indicates that we might be set for going higher. This might need to back test. Of course, it might just pop on through. So two potentials there. Which one? You're like, hey, JT, I really want to know which one. It's not high probability. The high probability was we busted here, we went up here, we tagged it. Even though it looked like we might get a bigger downside, guess what? Ground higher, popped on up. Microsoft came up just shy of that extension target. Retracing, we might see this retest some of these fib lines down here. And then turn around and push higher. Still needs to tag that 565. Doesn't have to, but there you go. And next upside on NVIDIA, 212 right there. 212. Tesla, working on the breakout. Back testing it. This downtrend of highs cooking. Popped out. Back testing. If we hold, upside. If we get back below, probably going back below this and maybe down to that 270 target I've been talking about for forever. It did a daily roadmap line setup bounce right there. Hasn't gotten up to the target yet. That was actually off of not this big one back here. Come on. This one right here. That high. That low. Popped above here, retraced. So the target on this one is 368 if it can complete. 75% likely to do that. But it can always fail. Dollar below the low is where it fails. Down here. How long? 45 days on average to complete that. But standard deviation on it is 35 days. So if you want 99% of the time to be covered, that's 155 candles, 155 trading days. And you're like, whoa, that's 6 months. Yeah, maybe a little longer with weekends and holidays. Netflix, still working on this. Absolutely beautiful correction. Look for that downside there. We have to hustle up. Got like 10 minutes left here. All right, I pulled gainers and decliners. Today, only 11 gainers. There were like 80-something decliners. Usually I hunt for opportunity, but we had 59 setups with my signature roadmap pattern. So I thought that was more important to cover today. So we're going to hit as many of those as I can before I run out of time. This one right here, 6.4, low price stuff. Be careful. I don't like low price stuff. Usually, it's not where I like to trade. I like to trade where the big boys trade, which is typically above 20. ADI, set up the entry, 252 target right there. Let's look at the statistics on this ticker. 53 trades, 75%, and negative profit factor means it loses more than it wins, and I would stay the fudge away from that one. All right. Another one right here. There's the high, there's the low. $10 on the upside. ARL. Thank you. All my automated systems kicking off here. There's the high, there's the low. There's the entry. 16 target on that one. Again, negative profit factor. Not a big fan. 30 is a statistical population. So if you have less than 30 trades on the back test, it doesn't really mean jack squat diddly. It's not a statistical population. Liars use statistics. Remember, statistics never lie, but liars use statistics. And when you do statistics on something, that has less than 30, doesn't really mean jack squat. But this has 49. That's check plus. This has higher, almost 80. So that's another check plus. And 1.5 is less than 2 is where I like to look. The average across the whole system, like, I don't know how many thousands of trades I'm up to. 50, 60,000 backtest trades across all time frames. The average win rate, 74.8%. 74.8. And the average profit factor is 1.28 across tens of thousands of trades, all time frames. So this one running better profit factor than average, better profitable trades than average with a statistical population. This one might be able to pass the mustard and get right up there to 137.36. Now, funny enough, all time frames, like whatever time frame you run this on, if you do the pattern in the time frame that I actually have the filters for, 45 candles is the average time to work it out. Standard deviation on that is 35 candles, all time frames. So 3 standard deviations. That's what you got to have to get 99%. That adds 105 candles to it. So, yeah, 150 candles. I round up a little bit, 155. That gets you like 6 months. 100, I think 210 calendar days usually when you're looking at it, because the weekends don't make candles. The candle maker isn't open on the weekends, but if you're trading on smaller time frames, those numbers still play out. So, ATRO right here. This is a high probability pattern, so that's right there. 38, 26, 84, 1.3. Not bad. Even with 4 losses, that's still going to be still going to be running better than average, but the profit factor is not smoking hot. AXSM, look at that profit factor. Holy bananas. 83, but only 6 trades, so those numbers don't mean jack squat. We could have 24 losers and just destroy that one. But maybe like, well, there's the big pullback. No, that's not the one that triggered. The one that triggered is right here with a 116 upside target. BRKL, Burkle. That last one worked out. Look at that. Talked about that like back in June, July, early July. And there's the high. Oh, come on now. Alert messed up my tool. There's the high, there's low, and looking for that upside target around 11. And man, it's I don't know. I wouldn't rely on that. I'd just go back to the default. When they have less than 30 trades, run back to the default, unless it's just unbelievably higher. And there's no way that the losses would, 5 losses here is going to destroy these numbers. So that one, 25.98. BUSE. Here's the high, here's the low, there's the entry, 25 target, 25, 76 negative profit factor. CFP or CPF. Strike it, reverse it, and didn't actually trigger, but 2750. So the pattern, we come down, we get a move up, we get a retrace, we go through or touch the roadmap line, we come up, get a close above the 618, that's the entry. The high probability pattern is an extension to the 1.1448, which is 90% of the way to the 1272 target, which is 70% likely to get hit. This one's 74.8% right there. So I'll take that. I'll take that bet right there. I have automated systems. That's what keeps kicking off down here. Automated systems on smaller time frames, like Apollo, Echo Trades, Triple Threat, the new credit spread trade, all runs on smaller time frames. CRAI. Look for that one to pop. The target on that is actually a bit smaller. 209. CVS. This one kicked off back here. Algorithm already in it. Kicked off again. With that close. Sloppy me. Didn't draw the fibs right. That close just barely above that little big bitty green doji thing. So looking for a target up here around 72 for CVS. Citizens North, whatever. That last bounce worked right there. So we got the high, we got the low, we got the pop up and retrace. 20 is the target. DBA. I'm not gonna have time to get up through all these. Here's the high, here's the low. 28. DBX. I don't like that downtrend drop box. Come on now. DIOD. There's the ups, down. 60 is the target. It's kind of in a downtrend. I'd be careful trading counter trend. Elf Beauty. My cold, hard mistress right here. I made a prediction on Elf Beauty. I put an option on it. I ran out of time, and then it did the exact thing I wanted it to do. But I lost money because I ran out of time. And I still hold a grudge. Here's the target, 139.50. Doesn't have much history. And look at that negative profit factor. It's practically zero. EPAC. And I don't like the downtrend here. Just them downtrends don't mean it won't work. Like all my back testing counts all the different things. 46.78. I just don't like to trade in a downtrend. That's just my personal. I feel like I lose more than I win when I trade counter trend. Even though I'm skeptical and always talking about how do opposite stuff of the crowd. So big picture, this is already in it from back here. Looking for that 35.57 target. Smaller picture, we've chopped and chopped and chopped, and we have a smaller 32 target right there. EWN. Very choppy price action here. Lots of gaps. There's the entry, looking for 55 on the upside. That was not great with the negative profit factor. Profit factor under 1 is negative, just in case you didn't know. This is gross wins divided by gross losses. So anything less than 1 is negative. And kick off for 44 target. G Greco. Is this the people that make? No, I was gonna say, is this the people that make like baby stuff? But looks like not. Pop up 90 target. GLDD. Great Lakes Dredge Dock. $12 on the upside. GPI. Go, baby, go. I'm going to have to wrap this up here. I'm going to visit the restroom before I pop on another show. There's $4.99 right there. HZO. Here's the high, here's the low. Lots of stuff to talk about today. $29.50. INTC. This one just keeps grinding lower, lower, lower. Be careful. We might have a bottom in place. That last one worked out, though. See, that last one worked out right there. Here we are again. Potential for 24.55 on Intel. INVA. Ooh, that one. That looks beautiful pattern-wise. 1, 2, 3. Beautiful pattern. 22.59 targets. Anything else in here I want to talk about? UCOM. Yeah, I don't like that. Entry at the roadmap line, not good. Starbucks. I'm long Starbucks, and I don't like that pattern, but potential to go back to 100. I think that's where my calls are. I have long-term calls out to next year. THC. Oh, that's a really pretty one. 189. Not the best numbers, but I might take that one actually. I would really like it better if it was over 2 on the profit factor. But I know there's some other greater win rates and stuff in here, better profit factors, but I need to go be on the other show. So thanks for coming, everybody. Bias for the day. Be careful on that correction. Be careful right here. This thing could get out of hand if we don't hold support and turn back higher. So watch this 3-wave correction here. We can hold on the roadmap line. 5-minute holding so far. That can take us higher. If we get through the 5-minute, 15-minute right there, down at 6,400. If we get through the 15-minute, 30 minutes down at 63.70. The 1 hour down here at 63.30. And the 4 hour all the way down here at 6,100. So if we get through the 1 hour, things are looking pretty bad. We're going to go much lower. So be careful out there. Otherwise, we might go higher. We've got higher upside targets to go. Higher upside targets. So upside 65, 62 for now. That'd be the 1272 on this big pullback in S&P from back in the beginning of the year, like in April, the April Liberation Day low. Have a great day.